Hello everyone, this is Royston from NOF. Today we are going to do a quick video on the merger announcement between Keppel O&M and Sembcorp Marine and my brief thoughts on it. Both Keppel and Sembcorp Marine requested for their share prices to be halted before the start of market trading on 24th of June. At the time, various media reported that both companies are in the process of kicking off talks to explore combining their struggling offshore and marine businesses. This merger between both their O&M entities is long overdue. I've commented previously that Keppel divesting its O&M assets with the blessing of key shareholder Temasek will be the key catalyst that's needed to propel its share price higher. After the market closes on 24th of June, both companies announced that they will be signing a non-binding MOU in connection with the proposed combination of Keppel Offshore and Marine and Sembcorp Marine. Before I go into the details of the MOU, a quick background of what happened over the past year. When Keppel first announced back in 2020 that it was looking to restructure the company, hope was in the air that the company would seek to divest its O&M entity and merge it with Sembcorp Marine, just like what Sembcorp Industry did previously. Alas, the company disappointed the street when on 28th of January 2021, alongside the announcement of its full year 2020 results, Keppel highlighted that it will do an organic restructuring of its rig building business, exiting its offshore rig building business, and also progressively exit low value adding repairs. This doesn't change the status quo. All it meant was that less emphasis and resources would be channeled towards its O&M business. In addition, the restructuring requires the group to pump in an additional $500 million into the development company for the completion of unfinished rigs, thus further sapping the group's cash flow. I highlighted back in January 2021 in this article. What Keppel is currently doing is essentially in preparation for that still yet to be announced merger that pools the knowledge and resources of both companies into a single and large corporation that will be able to better position itself to compete against the South Koreans and Chinese yards. I still believe that a merger might materialize down the road. The question, however, is when that might be. I decided at that point to pair my stakes in Keppel, then as the timeline of their O&M divestment and subsequent merger with Sembcorp Marine was no longer clear. Here are the details of the MOU. There are two key points. Number one, Keppel will be looking to combine Keppel O&M together with Sembcorp Marine, with the latter now being the combined entity. Number two, Keppel will sell its legacy rigs, completed and uncompleted, and associated receivables to a separate asset company, which will be majority owned by external investors, while Keppel retain not more than 20%. Both proposed transactions will be interconditional and pursued concurrently. These transactions will be earnings accretive to Keppel Corp for the current financial year, and if completed, Keppel Corp will receive shares in the combined entity and a cash consideration of up to $500 million. Keppel will then look to distribute to its shareholders the shares of the combined entity by way of distribution in specie. So, the combined entity will essentially be the enlarged Sembcorp Marine, and the company will remain a listed company. Most likely, Sembcorp Marine will be raising funds to make the payment for this Keppel Corp. And at the end of the day, how many shares of the enlarged entity Keppel will be entitled to is still uncertain. The deal at the end of the day is likely going to be positive for Keppel's share price. At the current moment, as I'm doing this video, its price has appreciated by 5% to trade around $5.40. I believe the positive momentum will likely continue on in the coming weeks ahead, just like how Sembcorp Industries have performed post the divestment. This is the catalyst that everyone has been waiting for, a merger between Keppel O&M and Sembcorp Marine to form an enlarged entity that can compete on the global front. With this formation, Keppel will be now more of a property or urban development player versus having an offshore position. Now, the question is the 500 million payment plus shares of the enlarged entity a good deal for Keppel's shareholder? Let's take a look at how some of the brokerage companies value Keppel. According to both UOB Kay Hian and CIMB, which have a target price of $6.37 and $6.40 on the counter respectively, both brokerage houses peg the value of Keppel's O&M entity at between 5 cents and 34 cents per share, respectively in deriving their target prices. That essentially means that the value of its O&M business has largely not been factored in by the street. What that again means is that almost any price which Keppel gets for its O&M business will be a plus for the group. In its 2020 financial statements, Keppel stated that the net assets for its O&M division is negative 658 million versus 2019 net asset of a positive figure. Even if Keppel were to divest away its O&M business at a loss in terms of a revaluation gain, that is going to be positive for Keppel. This is why Keppel highlighted in this MOU announcement that the deal will be earnings accretive for the group, as it will be able to remove this negative value from its balance sheet. Concurrently, the net debt level of the group will also fall, which is another positive, although the overall gearing level will not change much. Back in August 2020, when I wrote about the Sembcorp demerger deal being passed and what Temasek's plan might be, I highlighted that Keppel's O&M division was then valued at roughly about 0.2 times price to book according to CIMB, with a book value of roughly about 1.8 billion. This means that its O&M division was valued at just about 320 million based on its then share price of $4.88. I reckon that it should be worth at least 0.4 times price to book, which implies a fair value of roughly 640 million for its O&M division. Keppel is now receiving 500 million in cash plus an unknown amount of the enlarged Sembcorp Marine shares. With Sembcorp Marine now boasting a valuation of roughly 2.4 billion before this rights announcement, the enlarged entity would likely have a larger market cap. Unless Keppel's shareholders are entitled to less than 8 to 10% of the enlarged entity, this deal is most likely one where the divestment is a better deal to existing Keppel shareholders versus a status quo scenario. For 500 million, this equates to roughly 0.275 per Keppel share based on the outstanding share base of 1.82 billion. I expect the positive momentum to carry on with investors and speculators anticipating another windfall when the number of shares in the combined entity is confirmed. What does it mean for Sembcorp Marine on the other hand? On one hand, it is good that Sembcorp Marine will now have access to Keppel's O&M resources, talent and IP, etc. However, on the other hand, the company is looking to raise 1.5 billion in terms of rights to fund the acquisition as well as for future working capital purposes, and this is going to be negative for the company. In the long run, the prospect of the rig building industry is also a highly uncertain one. At this point of time, Sembcorp Marine share price is down close to 20%, which should not be too much of a surprise. This price weakness might actually continue, which is quite different from what I expect for Keppel's share price. In conclusion, this is just my preliminary assessment of the deal, and by no means should it be taken as a call to action to buy or sell Keppel's share. At the end of the day, I believe this merger is a positive development for Keppel, one which the street has been anticipating for years. It is better late than never. The enlarged entity will likely be able to streamline their operations and cost cut to lower operating expenses to be able to compete for projects against heavyweight yards in South Korea and China. More details will be needed to assess if Keppel is indeed a good buy at the current level of over $5.40. While this is only a non-binding MOU, I believe all parties have the incentive to push it through, particularly Keppel, which will stand to benefit the most from the divestment of its Keppel O&M entity. With that, we have come to the end of today's financial tidbit. I hope that you have enjoyed this video. Do hit the like button and subscribe to the NUF YouTube channel. Once again, this is Royston signing out.